Hi everyone, I just posted our day 14 in our 90 days to taxes series where I am taking new businesses or businesses that may be a little bit disorganized. I'm helping you get organized and get ready for tax season. So today was all about revenue and a lot of common mistakes that I see small business owners make that affect their taxes. One of which is recording your revenue based on what actually gets deposited into your account rather than what your payment processor is processing. For example, if you are using a company like Square or Stripe or QuickBooks, you probably have a 3% fee on that card transactions that are coming through. And so if you take $1,000 in payment, you're incurring a $30 fee roughly for that transaction. If you record your revenue at $970 because that's what gets deposited into your account, it is potentially going to create a mismatch when that payment processor files a 1099-K. So they're going to report to the IRS that you earned more than you're actually reporting on your tax return, and that is a red flag for an audit. Okay, so you want to record the gross amount of revenue and then adjust that with an expense for your payment processing fee. Okay, so you report the actual revenue that you've collected and then you reduce that by your payment processing fee, and the net amount goes into like a clearing account or something along those lines. Other common mistakes that I see are not separating out your revenue into appropriate categories. So your operating revenue is generally taxed different than revenue such as interest or dividend revenue. That needs to go into separate accounts when you're doing your books during the year because you need to break that out on your tax return. Other different types of revenue are going to be like if you sell an asset, the sale of that asset and the revenue that you collect from that may be subject to some different taxes, or you may have something like depreciation recapture. You need to make sure that that revenue is separated out so when you go to prepare your taxes, you're able to better understand what your tax burden is and you're not incurring unnecessary taxes like paying self-employment tax on interest revenue. Other things like cashback income, that is not taxable, but it directly reduces the expenses associated with that cashback income. So I have a longer video where I go over this in more depth. The link is in the comments to give you a little bit of a better idea, to help you get prepared for tax season and break out your revenue. If you have any questions, let me know, and I'll see you guys next time.